Guys, something major is happening to Ethereum today that's going to have a massive impact on the entire network and could significantly affect the Ethereum price itself. You know, the number 2 cryptocurrency by market cap, one of the most favored assets for the 2024 crypto bull run, with insane network adoption and multiple Ethereum ETFs pending in the pipeline for this year. Things are really shaping up for a bright year for Ethereum overall. I'm explaining in this video today what this critical update is that you need to take a closer look at. If we haven't crossed paths yet, I'm Mike, and I'm here to navigate you through the world of cryptocurrency. If you find this video helpful, why not subscribe, give it a thumbs up, and drop a comment below. Your support means a lot. Alright, so let's delve into this. Obviously, nothing I'm saying in this video is designed to be financial advice. I'm not trying to persuade you to buy or sell any cryptocurrency based on this information, but let's set the stage for this big event in Ethereum today. This significant critical change is coming down the pipeline, so if you've been involved in crypto at all, or maybe you've experienced it yourself, you've heard the complaint that Ether is too slow and too expensive to use for mass adoption, and at times of peak network activity, the network can be pretty expensive to use. But that's all about to change, starting with this network upgrade that's coming out on March 13th. Ethereum is going to undergo a massive upgrade that can reduce the gas fees by anywhere between 10 and 100 times. Let me say that again, decrease the fees between 10 and 100 times, and also increase the transaction throughput to up to 100,000 transactions per second. By doing this, it will silence the biggest criticisms that Ethereum has, that it's too slow and too expensive to use. It's about to get much faster and much cheaper, and of course it's going to have a massive impact on Ether, the price itself. Alright, so let me break this down for you. This significant upgrade is all about Ethereum's scalability. That's what I mean when I talk about making Ethereum faster and cheaper. We're enhancing the scalability of the blockchain. So, how does it work? The whole strategy, which has always been the case, revolves around creating what's called a Layer 2 for Ethereum. Essentially, it's like a separate blockchain that operates on Ethereum, where you conduct transactions. You point your MetaMask to it, but you pay the gas fees in Ether, and then these transactions get settled back on the main Ethereum chain. So it's kind of like a separate blockchain, but you need Ethereum for it to function. You can find a list of various Ethereum Layer 2s on a website like alchemy.com L2. You'll see things like Arbitrum, Optimism, Starknet, Polygon, and many more. These are all separate blockchains that operate independently, but they require Ethereum to work, and you can already start using these Layer 2s. However, if you look at the metrics, like Arbitrum having about 12 transactions per second, it's not a significant improvement over Ethereum's Layer 1, but it is in terms of fees. Considering the fees for Arbitrum, it's around 41 cents for transferring Ether and about $1 for a swap. But what if all these metrics skyrocket? What if it costs just 1 cent or a few cents to send Ether, maybe 10 cents for a swap? And what if you could achieve 100,000 transactions per second for something like this? Well, that's precisely the direction we're heading with this new upgrade that's rolling out. So let's dive into the mechanics of how this will function. This update encompasses various elements, but the pivotal aspect is referred to as EIP 4844, short for Ethereum Improvement Proposal. Essentially, individuals propose modifications to Ethereum, which then undergo a voting process, leading to network updates. Now, while this update encompasses multiple facets, my focus is on a novel transactional approach. First, let's understand the basics of Layer 2 scaling. When scaling a blockchain, there are several strategies. One option is to accommodate more transactions within a single block by increasing its size. However, Ethereum opts against this approach due to the rising costs associated with validators and the necessity to maintain decentralization to attract broader participation. This rationale underscores the existence of Layer 2s. Currently, Layer 2s employ a technique known as roll-ups, consolidating multiple transactions before referencing them back to the Ethereum main chain. For instance, imagine Ethereum has 10 transactions in a block. Now, what if a Layer 2 could bundle 100 transactions into a single transaction on Ethereum's primary layer? This would result in a 100-fold scalability increase. However, despite these advancements, posting transactions onto the main network still incurs costs. The forthcoming update aims to address this by introducing a specialized method for incorporating transactions onto the network, significantly reducing data requirements. This innovation enables the consolidation of numerous transactions into a single entity, thereby expediting processing times and reducing costs significantly. So, let's delve into the specifics of how much faster and cheaper this upgrade could make Ethereum. Once again, the improvement could range anywhere from 10 to 100 times cheaper, coupled with the potential to boost transactions per second up to 100,000. Imagine a scenario where sending cryptocurrency costs just 1 cent. That's the scale of transformation we're discussing. Moreover, envision processing 100,000 transactions simultaneously without any hitches. That's the exciting trajectory we're embarking on, commencing March 13th. However, it's essential to consider a couple of critical points. Post the 13th, attempting to utilize the actual Ethereum blockchain with your MetaMask won't yield faster or cheaper transactions. This might lead some viewers to confusion, thinking the anticipated improvements haven't materialized. Yet, it's crucial to understand that these enhancements pertain to Layer 2s. The core Ethereum network, known as Layer 1, won't see immediate speed or cost reductions. This is precisely why Layer 2s are instrumental in achieving such enhancements. Another vital aspect to bear in mind is that while we're laying the groundwork for these advancements, we won't immediately experience the full benefits of processing 100,000 transactions per second. It's a gradual process that will unfold over time. Starting March 13th, we're not going to witness fees plummeting to just 1 cent per transaction. This marks the initial phase where we begin to approach those levels gradually over time. However, I do anticipate an incredible surge after this network upgrade goes live. Now, that being said, how will this impact the price of Ether, the cryptocurrency powering the Ethereum network itself? Well, I expect this development to actually bolster the Ethereum price for several reasons. Firstly, we're in a bullish market for 2024. While nobody can predict its exact duration, bull markets typically thrive on hype and narratives. If we witness this issue being resolved for Ethereum, it could fuel significant momentum, propelling the cryptocurrency's price higher. This is a common occurrence in bull markets. Furthermore, there are underlying fundamental benefits that can contribute to the price of Ether appreciating over time. As demand for the network increases, so does the value of the cryptocurrency intricately tied to that network, along with the gas token. This aligns with Metcalfe's law, which posits that the more people on a network, the more valuable the associated cryptocurrency becomes for various reasons. Moreover, as fees become more affordable, there's a greater incentive to utilize Ethereum, leading to a potential ripple effect on the long-term price of Ether. While this may not necessarily reflect its value during a bull market, it certainly contributes to its fair value over time. Now, when you combine that with the fact that Ether is now deflationary, things get even more interesting. This shift occurred since the last bull market, so if you've been out of the loop during the bear market or are just joining us for the first time, you might not be aware of this. Ether is being burned every single time a transaction is created and added to the blockchain. This began with the merge in September 2022, and since then, the supply of Ether has been steadily decreasing. It's akin to the Bitcoin halving event happening every single day. So as network demand continues to soar, more and more Ether will be burned as a result of this heightened activity. Consequently, the supply of Ether will continue to dwindle. And as the supply diminishes while demand surges, it naturally impacts the price itself, adhering to simple supply and demand economics. But that's not all. We also have multiple Ethereum ETF approvals in the pipeline, poised to open the doors for institutional adoption. Essentially, this allows significant players seeking exposure to Ethereum to enter the market through these avenues. With a network that's rapidly enhancing scalability and constantly burning Ether, it becomes a compelling proposition for these institutions to bet on. This heightened institutional interest will undoubtedly drive up demand for the asset, further influencing its price. So that's a comprehensive overview of the monumental changes coming to Ethereum with the upcoming upgrade. Feel free to share your thoughts in the comments section below. Do you believe the Dankun upgrade will live up to its hype? Or do you think it won't have a significant impact? Will we truly experience the scalability benefits promised here? And if you found this video helpful and want to see more content like this, don't forget to show your support by leaving a like and subscribing to the channel. Thank you all for helping us reach 600 subs already. This was Mike, signing off for now.